Good morning, friends and fellow traders. This is Doug Campbell with Right Way Options, and this is the morning market prep video for June 23rd, 2023. Well, my goodness, yesterday we had a little bit of a big tech rally, but everything else was a little bit on the bearish side. So, what does that mean for today? Well, how about we settle in? Let's buckle up. Let's get ready for the Friday edition of the morning market prep video. Good morning once again, everyone, and thanks so much for being here. I do truly appreciate it. Hey, before we get started, I want to say thanks to everyone out there who attended the Right Way Options open house yesterday, and we're going to extend that into Friday. We're going to do another day of open house, providing as much quality education as we can. So if you are available today, if you happen to miss yesterday, if you're available today, I'll place a link just below the title of the video where you can come over and join us today in that open house. We'd love to have you there. We had a great time yesterday. Let's take a look at some stocks. Let's take a look at these indexes and see if we can kind of figure out how we might want to approach the market for today. First off, as you can see, we've got a little bit of bearishness starting here in the pre-market. We had Asian markets down across the board last night. Once again, Hong Kong kind of led the selling, and that's a very tech-heavy index over there. Led the selling last night over there in Asian stocks, and Asian markets are struggling pretty heavily right now. Their hoped for big recovery really isn't happening, and now they're talking about having to go back to money printing stimulus to get things going over there in the Asian markets. Let's take a look right here on the diamonds. As you can see, little bit of pressure here. And yesterday I suggested that we might test this support area here in the chart if the bears continue to engage. And they did do that, and we ended up testing that level before we picked back up. And when we picked up, it was essentially big tech giants that lifted the index back up from that. Everything else wasn't looking so good. Now, if you were to ask me this morning, where are we going to go? Boy, it's a tough call here because we have extended this down for several days. And so you get that sense that we should get some kind of relief rally here soon. So if the bulls were to find some inspiration here today, I'm going to push this line right up here and say we might rally up into that area right there to see if we could test some of these resistance areas right in here in the chart. If we can find a bunch more inspiration, and I really don't know what we're going to find it on today, it's kind of a light day of data, maybe right up into here on that bullish move. Now, if the bears continue to find inspiration, and you can see pushing down into that support level of the chart, the next level down in this is probably down in this region right in here. You can see these points right in here where we might test that level in there if the bears continue to push. Now, keeping in mind that would be a pretty painful pullback for the Dow. Now, that doesn't really hurt us all that much. If I flip this over here to our 50-day moving average, you could see that would be just a test, a good strong test of the 50-day moving average, and all of these, this grouping of averages here that could provide some price support in the chart. So we may be drawing down toward that 50-day moving average. So watch that closely. I think there is a possibility for that, just simply because we have so much uncertainty after the Powell comments. And this morning we've got bonds continuing to invert after those comments. As a matter of fact, the 2-year bond this morning is at 4.76. The 10-year bond is at 3.75. So we now have more than a 100 basis point inversion of the 210. And that's never been a good situation for the market. It really says recession is on the way, or maybe even on the brink of starting. So watch that closely. Let's take a look at our SPY now. SPY had a good day yesterday. Nice pop up. Again, it was led by a handful of tech giants. That's what lifted us. The majority of the S&P 500 was lower. Now, I will say that there was some healthcare in there that was moving up yesterday, but for the most part, the major lift happened here in big tech, and you can see placing a bullish engulfing candle in there. Now with that selling in tech in Hong Kong resuming, you can see we're looking at a potential gap down here this morning to take a lot of that right back. So watch that carefully. If the bulls find inspiration today, I'm going to suggest maybe a retest of some resistance right in here. You can see we can tie these candles here together with that line and almost tie this one in. So that would seem to be the resistance to the upside. If we can find that bullishness, maybe we push up into there. If they can push a little bit higher, then maybe we come up and retest that gap area here of that black candle where we gap down after that first day of selling on this pullback. Now, keeping in mind, guys, that we are going to be heading into the next round of earnings here before too long. And it is entirely possible, since we were so overextended in the short term, that maybe we just consolidate and rest until we begin those earnings. So just kind of keep that in mind. Now, in this chart, if the bears were to find more inspiration, well, I'm going to suggest the first place we're going to test is this breakout here. If I pull this back, you can see that was a breakout of that resistance right there in the chart. And if the bears find more inspiration today, maybe a test of that area as support. Now, as I mentioned yesterday, if that area were to fail, we're probably looking at a pullback that would come back down into here and maybe into that area of the chart to find that price support. Now, keeping in mind, if that were to occur, we're still in an upside trend. So there's nothing wrong here with that chart. It's still very, very bullish overall. Now, if we look at our moving averages, you'll notice that even if we pull back that far, we're still a long ways from the 50-day moving average. That just kind of gives you an idea of the extension that we had here and why the market was getting a little bit on the dangerous side, having gotten too exuberant to the upside. So watch that carefully here. I can't say that we're going to continue to pull back, but I would say that there is certainly clues that that possibility does exist. If we take a look at our QQQ is also it is the most overextended index in the market, and you can see we put in a bullish engulfing candle there yesterday, and now we've got this little pullback going on here in big tech, but not so much as we're seeing in the SPY. We've got other things in the SPY dragging the SPY down, but QQQ still holding up in here pretty well. So you still have to say this is the strongest index in the market and still the most overextended index. If those bulls continue to find inspiration here today and push this up, well, let's look for a little bit of price resistance, maybe right in this area, that high of yesterday. You can see where we've got these candles all kind of coming together right in that area. See if we can test that and possibly break it. If we can break that level, once again, I'm going to push that up right into the bottom of that black candle right there for that next little lift to the upside. If that breaks, we're back up here testing the resistance of the high here, recent high. Now, if those bears were to engage, this would be really disappointing to the big tech sector, I think, and that would be a push down to retest the low of yesterday. certainly seems to be a possibility the way the market's forming up here this morning. If that were to break, unfortunately, our next test of support would be somewhere, maybe we can test those wicks. I'm going to use the candles here. That would be a pretty painful pullback in the QQQ. Now, keeping in mind, if that were to occur, we're still in a bullish trend. And you'll notice how far we still are away from our 50-day moving average. So a pullback into that area, or even all the way down into there, doesn't change the technicals here in the chart. It just really is highlighting just how overly extended we were in the market. And perhaps we don't pull back, perhaps we just slip into more of a consolidation, and we consolidate out here, allowing that 50-day moving average some time to catch up in the market. If we take a look at our IWM, well, IWM had a little bit of trouble yesterday, breaking some support. Not terrible, but breaking some support in the chart, and now pushing on lower here this morning. So if those bears continue to find that inspiration here to keep selling, we've got a little tiny bit of price support right here. But if that doesn't hold, I think there's a pretty good chance that we test this green line here, this price support, which is a pretty substantial level that runs across the chart. Pretty good price support area in there. Now, if the bulls find inspiration, I'm going to suggest we push right back up and we test the resistance, the underneath side of that consolidation right there, if they can find that inspiration. Now, keeping in mind on this chart, we're still quite a ways away from that 50-day moving average, but you'll notice that we've got a 500-day moving average in between there. So catching some support right in here would be a logical place to catch it, and then we might be able to get a little bit of a relief rally after that point. Let's take a look at our VIX. Now, I got to tell you, our VIX is just a confounding situation here, because as the market pulls back, look at the fear. Fear is dropping out of the market like crazy. As a matter of fact, it's remarkable how complacent the VIX is showing right now. Now with that circumstance in play here, I would have to tell you that the VIX is making no sense at all. We rally in the VIX on days that we move to the upside. We sink in the VIX on the days that we sell. Something is really out of sync here in the VIX. They're going to need maybe potentially a complete revamp because of the way people are trading the market with so much, sometimes up to 40+% of the market, people speculating on zero data expiration options, and it's changed the dynamics of the VIX so much it's almost becoming nonsensical. If you take a look at our T2122, T2122 had a little bit of a rough day yesterday, pulling back. You'll notice right in here we are just below that 50, that center area here in T2122. When we start drawing down below that center area, it kind of pulls markets to the lower side here. Now, we did recover a bit at the end of the day. We were a little bit more extended about 20 minutes before the market closed, but then we had that surge of buying right at the end of the day to pick us up a little bit more. So what we have here is a situation where our T2122 says we have about an equal weight for an upside move and a downside move here in the market. So with the pre-market kind of showing us that bearishness, don't be too surprised if we kind of pull toward this lower side here in T2122, but then we might catch a bounce. So no harm here in the technicals of the charts. Just an overbought condition. If we take a look at our T2108, this will give you a better description of what's going on in the market. We had that sense by the big techs that everything was great, nothing to worry about here, because the tech giants were lifting us up. but the percentage of stocks above the 40-day moving average continue to fall. And we've got about 56% of the stocks holding above their 40-day moving average. And that's not bad. That's not a terrible situation. We're just removing some of that frothiness that I've been talking about here in the market. And if you look right in here, we're still holding on to some support levels, and we have a stronger support down here just below. So although we're pulling back, and I know that's making people feel a little bit crummy in the market, there really is nothing here that says this is terribly bearish in T2108. But it does show us that weakness, although big tech is trying to hide that weakness from the market. If we take a look at T2107, well, T2107 also pulled back, and it pulled back fairly substantially. 45% of the stocks holding above their 200-day moving average. So it shows that weakness in the market. But we have a little bit of price support in here. We could catch that price support and see if we could bounce off of that. But with the selling that we see this morning, I think there's a chance that we could extend this down and maybe be testing this level of price support here before too long in T2107. So still that little bit of bearishness here. But once again, it's not horrific. It's not terrible. This is just a healthy pullback in the market from an overextended condition. If we take a look at our T2101, well, T2101 still is not showing us that potential hook. That hook is where we see we want to see that hook right in here, seeing that momentum shift. Right now, that momentum continues to be on that downside move. You can see the momentum shrink. We've been seeing volume shrinking pretty dramatically here in the market as we pull back. So watch that closely. I think it's just a lot of uncertainty about what comes next with, of course, the FOMC, what comes next with countries around the world that are continuing to raise rates, what comes next in the next round of earnings out there. So watch that carefully. Let's take a look at our economic calendar here for today. Now, our economic calendar, we don't have a whole lot here to be worried about today. And this is one of the problems that we've got to deal with as well. We've got one notable report here this morning on the calendar, and that's going to be the PMI. We do have Mester out here speaking later on her farewell tour. But other than that, the Baker Hughes rig count. Now, if we take a look at the consensus numbers on the PMI composite, this is going to be an interesting report. You can see that PMI is suggesting that our manufacturing PMI continues to decline just a little bit here. We're at 48.5 on that consensus estimate, which continues to show anything below 50, we are in contraction. And services PMI looking to come in at 53.5. That's been one of the areas that's been holding up well. Restaurants and things like that, people out spending, been holding up just above, but we're kind of reaching that stall speed in that services sector. So watch those closely here this morning. They could be market moving depending on how those numbers come in. Then let's take a look at our earnings calendar. Well, unfortunately, there's not much happening on the earnings calendar today. And by the way, I chose not to do a blog today, being lazy this morning. Not going to do a blog. We only have 2 verified reports here this morning that we might want to pay attention to. But APOG was one of those reports reporting this morning, gapping up. It's typically a low volume, relatively low volume stock, but gapping up here this morning on its earnings report. We have KMX on that list, and KMX is getting some bullishness here on its earnings report this morning, gapping up. So keep an eye on that. And they just added one for today, ACST, a 59-cent stock. I don't think anybody's going to care about that. Certainly not going to be particularly notable for the day. Let's take a look at a few stocks that could be setting up for today. But before we do that, guys, if you could do me this quick favor, if this is the first time you've seen these videos, if you could please click that subscribe button on YouTube, and then also click that bell icon when it pops up so you'll be notified every time I post a video. And if you find these videos to be useful or helpful, if you could do me that favor, and that would be click that thumbs up button, leave a brief comment, helps the channel to continue to grow. I just want to say thank you so much to everyone who does take the time to do that. I truly, truly appreciate it. I want to let you all know, with the long day of talking that I have in front of me with the open house, there's a very good chance I won't be able to answer comments today. So I do apologize. This weekend I'll be on task of getting through some of those and making sure I read those. So thank you so much for everyone who does do that. By the way, remember, if you want to join us for the open house today and be part of that, just click the link below the title of the video. That'll take you back or right to a registration page where you can get registered for the open house and come right on in to the room. We'd love to have you there. Let's take a look at some stocks that could be setting up, and please keep in mind, guys, these are not recommendations to buy or sell any security. As a matter of fact, you need to do your own due diligence, be very, very careful in this market, and keeping in mind that anything is possible here as we're pulling back in this market, kind of taking some of that frothiness off. Anything is possible. So follow your own rules, follow your own risk tolerances on any of these trades. Never ever blindly follow someone else's trade ideas. Now, for example, I am actually short a QQQ position, and at the end of the day yesterday, my QQQ position is in pretty darn good shape. At the end of the day, I'm up 43.5%. There's a very good chance that I will have more profit in that this morning. So I'm still a little bit on the bearish side here, looking for that resting pullback in the market to potentially continue. I wouldn't chase anything in here short at the moment, though, because we've pulled back enough. We could be getting closer and closer to a potential bounce. Now, that being said, when we look at some of these stocks, you can see that there was a big move here in Apple yesterday. Apple breaking through, actually trying to poke out here to a new high. A little bit of pullback here this morning, but it's an undeniable bullish chart here in Apple. Just zoom, zoom, zoom to the upside here. Watch that one closely. Could keep moving up. Take a look at Meta. Meta, another one of the big winners yesterday, pushing up as big tech continues to stretch to the upside. These trends are unmistakable, very, very strong. Resting consolidation in here wouldn't be a big surprise if that were to pop out, if you still want to be moving into some of those tech sector stocks. Microsoft also, nice little bounce here yesterday, pushing off of support, so that could be a potential buy entry in here if you're interested in Microsoft. So you can see big tech really had a great day yesterday. Amazon just shot up hard yesterday, which seems kind of interesting to me because of what we're seeing in the credit card debt hitting new record highs. Folks are probably running into a little bit of problem with that debt situation, and our consumers seemingly slowing down based on orders. But boy, Amazon just really took off to the upside. So watch that closely as we approach some of these resistance levels in the chart there on Amazon. So big tech certainly did its job yesterday, lifting the market. And these companies are so dominant. They are, again, about 10 stocks are accountable for the majority of the upside move here in the NASDAQ. So we can't ignore that. Yesterday, Google tried to move down, but reversed to the upside. This one, I think I would be a little bit more question that possibility that this could actually set a lower high in here after breaking that support yesterday. So a little bit of a question in there. Other places that you might look, as you know, I've been kind of talking about some of the commodities because of the declining dollar. Watch right in here. U.S. Steel, I think, could be setting up in the chart. And you can look at other steel companies as well. I placed a price alert on this. I'm probably not going to be interested in picking it up here heading into the weekend, but maybe next week, a little bit of resting in here, that could still set up. If you take a look at like Cleveland pulling back to support, pull that down a little bit more, pulling back to support. If that were to find some buyers in here and bounce off of there, we could see a little bit of upside move. Wheat, my goodness, wheat continues to be very, very strong, finally starting to show maybe a hint of a pullback. This is fueled not only by the weakening dollar, but fueled by the worry that Vladimir Putin will violate his deal allowing wheat exports out of Ukraine, and that high possibility that we could see wheat prices moving to the upside as a result. Ukraine is a huge provider of wheat, so watch that carefully here. A little resting pullback could set up an opportunity in that stock. I've been watching a few other things like CCJ. As a matter of fact, I am holding CCJ, and it's starting to disappoint here now. This is one of those that I thought would have some benefit after this big breakout up here, some benefit with a weakening dollar, but so far that hasn't played out to be the case. Let's see if we can find some support in here and hold. Otherwise, we may have to start cutting some of these kind of stocks loose that they're just not finding that performance. The other place would be energy. We've talked about energy this week as being a source or a place where we might have that little bit of hope of that China recovery and a bounce coming in here. And I mentioned that on, what was that, Wednesday. We had that nice little recovery there on hope of China. And then we've just seen Asian markets continue to sell off the last couple of days. So we're pushing this back down in here. I would be really careful. We might be running into that demand destruction problem here in oil and gas, where the consumers are just pulling back. So with that, guys, I'm going to call this an end. I'm running this video a little bit long this morning. I want to wish you all a fantastic day. I want to wish you great results in your trading, and also a fantastic weekend coming up. If you want to attend our Right Way Options Trading Room today, we'd love to have you over there. And the market's a little bit funky, so we're just doing a lot of quality education here on improving your trading, and if that would be of interest to you, we'd love to see you over there. So everyone, take care, have an awesome day, and we'll see you bright and early Monday morning. I wish you all the best.